All right. Hello, everybody. Happy Monday. Happy weekday. I know it's a weird day to be having a webinar. I do apologize about the delay on this one. Been dealing with, and as you guys could probably hear, still a little congested. I've been dealing with a little bit of a flu going on in my household. So I do apologize about that, but I'm feeling a bit better. Was able to get this webinar together for you guys, and this webinar is going to be on morning routine and trading plans, right? And it's always so important to go into the market with a trading plan and after following your morning routine. Without having a morning routine, we could be really swayed, we could be really thrown off, and we could mentally not be prepared for the trading day. That's why it's always good to follow our morning routine and to make sure our morning routine consists of our trading plan. Alright, welcome guys, welcome. I'm going to get right into it. If you guys do have any questions, of course, don't forget you could always drop it in the YouTube comments. Don't forget to hit that like and subscribe button. We usually do these webinars every Saturday at 6 p.m. Eastern. Again, this one was Monday because unfortunately I have been very sick, and today's the first day I'm actually able to feel a little better. And I was able to get this together for you guys, so I hope you enjoy it. And after I'm done going through all the slides, I'm going to go over a real-life trading plan with you guys, right? I'm going to show you guys exactly how I set my trading plans, what I do for my trading plans, and how I make my trading plans, right? So it's never just one plan. All right, I'm going to buy here, I'm going to sell here. It's usually multiple plans that need some sort of confirmations, right? It's usually if A happens, then I'm going to do B. If B happens, I'm going to do C. You know, we follow these types of rules, we follow our setups, and we follow our trade plans. Alright, so let's get into it. So the power of a morning routine. The first few slides, I'm just going to cover the basics and the importance of a morning routine and of a trading plan. After that, I am going to go over a bit of a checklist for you guys on the important things we want to be acknowledging and to... So sorry, guys. Just going to have to bear with me a little today. But we're going to go over the importance and some of the specifics that we do need for our morning routines and trading plans. So the first thing we need to do is establishing a morning routine. It sets a positive tone for the trading day and encourages focus and discipline. So when we let ourselves wake up and know that we have time before the market opens, we're ready to get ready. Versus if we wake up at 9:20 waiting for the 9:30 market to open, we're probably not going to be well awake by 9:30, and we probably won't have the right mindset. So mindfulness practices in the morning routine enhance mental clarity and psychological strength. We want to be strong up here. We don't need to flex muscles here. We need to flex our muscles up here because we are going up against and with some of the smartest traders in the world. So consistency in morning rituals improves overall well-being, leading to more effective trading decisions. We have to remember that our well-being is our everything. Again, guys, I'm so sorry about the cough. Our well-being is important because if we're sick or oh my goodness, or if something's going on at home, we might not be able to think clearly, and we won't have that right psychological strength or mental strength that we might have every other day. So it'll throw off our trading plan, it'll throw off our routine, but by having a morning routine, we'll be able to acknowledge that issue or that dilemma before the market opens so we can maybe skip that day or skip some trades. So we have to be allocating time for self-reflection, and goal setting boosts motivation and aligns trading goals with personal aspirations, right? So self-reflection is huge and goal setting is huge. Now, obviously, we could say, oh, well, my goal is to make money in the market. That's everybody's goal. What's your real goal? My goal is to improve myself in this area. My goal is to make sure I respect my stop loss. My goal is to make sure I trade the NASDAQ today if it comes to this level. My goal is A, B, and C. Have a goal, have a checklist, and have self-reflection on how are you doing and how will that affect you in the market. So setting the foundations, creating a trading plan. A comprehensive trading plan outlines clear objectives, risk tolerance, and preferred trading style. Once we're able to really understand our trading plan and we have clear objectives, it's a lot easier to sort of wean out of all the distractions. You know, if I want to trade ES and NQ, then I'm going to watch ES, NQ, and maybe watch the VIX as well. As most of you know, I watch the VIX when I'm day trading ES and NQ. When I say ES and NQ, guys, for those who trade options, ES is the S&P 500, which is SPY or SPX, and NQ is QQQ or NDX. So identifying specific entry and exit criteria helps maintain trading discipline and reduces emotional decision making. Guys, I didn't just underline that one, but I wanted to bold that one too. To reduce our emotional decision making is huge, so huge. Our emotions can play such a role when it comes to trading that it could just completely derail us. Completely. It could derail our account, it could derail our plan. We want to be able to be so emotionally disconnected from our trades, winners and losers. We don't want to be like, oh, let's go on every win, because then what's that telling you? That's telling me that, you know, you're not really winning consistently enough because you're getting that overreactive towards it. Or if you're getting that upset over a loss, there's a good chance that you went too heavy in size, or that you didn't respect your stop loss, or maybe it wasn't a good risk to reward trade that you shouldn't have taken. So risk management strategies include position sizing and stop loss levels, protect capital, and ensure long-term sustainability. Again, guys, this sort of circles back to our risk to reward webinar. How, you know, if you have a 2-to-1 risk to reward, a 3-to-1 risk to reward, you're able to win half your trades or less and still be profitable. Like, I'll tell you what, Friday and Monday, that's this past Friday and today, and you guys could watch this in our recent live videos as well. I'd say average, I took 2 or 3 losses on each day, right? So 3 losses Friday, 3 losses today. I think Friday was even 4 losses, but I took 2 really, really great winners on Friday and 2 great winners today. And what did those do? Because I had a good risk to reward and because I had a good trading plan and followed them and executed accordingly, those 2 wins each day completely consumed those losses like they weren't even there. And each day I hit my daily goal, and it was fantastic, even with more losses than wins. So that just goes to show how important that risk to reward ratio really is. So incorporating performance metrics and trade review processes allows for continuous improvement and optimization of the plan. Again, guys, it's so important to follow our plans, because without following our plans, we won't really know what we're journaling, and without being able to journal completely right, we won't really be following our rules. And as traders, we have to see trading as a job. And the only person in charge of us is ourselves. We are in control of when we hit buy, of when we hit sell. And you know what? It's always great to have a community that you trade with, or to have a mentor that you're learning from, so that you're able to say, hey, I'm looking at A, B, and C. What do you think about that? Or, hey, I'm looking at X, Y, and Z. Tell me your thoughts. Or if I'm on live with our community, I'm saying, hey, I'm going to be looking for a short position if we start to fail this area. Then once we start to fail it, a lot of times we won't personally do call outs. We won't say buy now, sell now. But I'll let people know I'm going to start my position here, right? I'm going to start with a light size. I'm going in here. And then we wait. We let the trade play out. We measure our risks to reward, and we let it play out accordingly. So technical analysis in your trading plan. So integrating technical analysis techniques such as trend identification, bullish or bearish, higher highs, higher lows, lower highs and lower lows, and pattern recognition strengthens our trading strategies. Guys, that stuff alone, even without indicators, is almost all you need to understand market structure. If you're able to just read that we're continuously making higher highs and we're continuously making higher lows, well, then we're in an uptrend. If we're continuously making lower highs and we're continuously making lower lows, we're in a downtrend, right? Then you understand the conditions and the market structure we're in. Whereas if we're keep wicking a higher high and then we fail it and then we make a new lower low, now that's not only widening our range, but now every time we try to break structure, we end up ranging. And that's what gives us our ranges, because every time we break that structure, there are people on the other side trying to say, oh, we're breaking structure, we're going to continue lower, and they end up trapped in the wrong side of the market. That's the liquidity that we look for and talk about. So utilizing indicators like moving averages, MACD, and RSI enhances market insight and confirms potential trade setups as well. Again, guys, I'm not too big of a fan of moving averages, MACD, and RSI, but that doesn't mean they don't work, right? They've been around for hundreds of years, and they've been around that long for a reason. They work to a point. They are lagging indicators, so they won't give you a for sure deal. Nothing will. But it's not based off of order flow. But again, it's still there for a reason, and it's been there, and they're not going anywhere anytime soon. So, a good way to use MACD and RSI would be look for divergence. So if we're looking at a stock, and the stock is creating higher highs, and the RSI stops making higher highs and starts making a lower high, that would be divergence. We would look for the stock to have a pullback. But that could also mean a small pullback, where somebody could expect a larger pullback because of the divergence. That's sort of one of the reasons I don't like to use it. So chart analysis reveals critical support and resistance levels, aiding precise entry and exit decisions. Again, guys, this is something I'm going to go over once the slideshow's all said and done. I'm going to do some charting for you guys. I've got a clean chart of the ES over here, and we're going to do just like from square one. If I was waking up in the morning and all my zones were gone, I'll show you exactly what I do and how I do it. And another thing is incorporating the Fibonacci tool is also a great way to tell the strength of a trend, right? We know the 71%, the 78%, the 61%. These are very strong levels of the Fibonacci. And supply and demand analysis provides additional tools for identifying key price levels and potential reversal points, further enhancing our trade decisions. So once we understand all these different tools and ways to read the market, we're really able to take the pieces that we have seen profitable or we've seen have worked for us, and we're able to put them together. And the only way we'll really see if they are working for us is by using them, is by analyzing the market, and is by going over the market day after day and really getting a feel for it and taking those trades and then journaling those trades. I took this trade because of the moving averages and it didn't work. And say you do that 3 times, okay, well now let's cross moving averages off the list. Maybe you want to try MACD. Okay, I took this trade because MACD had divergence, but then the divergence failed and it wasn't strong. Okay, so maybe don't try that anymore, right? It's all different. It all depends on market structure as well. Just like supply and demand, guys. A lot of times, supply and demand will work just fine. But sometimes, there will be a lot more demands being formed, and supplies will keep being broken. Or supplies will be used, and demands will keep getting broken. That's when we're more bearish, or that's when we're more bullish, when the demands are being formed and supplies are being broken. It's all relative, right? It's all relative to the strength and the weakness in market context. So building a trading routine. Designing a structured daily routine allocates dedicated time for research, analysis, and trade execution. Again, guys, during this daily routine, We want to do our research analysis and understand where we're going to be executing our trades before the market even gets to those levels. We want to be not ahead of the market, but we do want to be ahead of the price. We want to know, okay, if price comes down here and buyers start to step in, I'll look to take a long entry with my stop loss here, and I'll look to risk X amount of points or X amount of dollars. Incorporating personal growth activities, exercise, or meditation boosts overall well-being and reduces stress. Again, guys, I can't stress this enough, that being stress-free and not feeling emotions in a trade is so huge. I don't want to tell you, oh, you got to be robots that can't feel emotion, because it's impossible. We're humans, we have emotion. But we don't want to be fixated on the trades. We don't want to be too heavy in size on a trade that if it goes against us, we're going to blow our port and we're going to get so upset and yada yada. No, that's where risk management comes in, that, okay, I'm going to enter here in 2 contracts because 2 contracts would equal my full stop loss. That's how much I'm willing to risk. I want to risk $200 on this trade. It's a 3-to-1. I'm risking 200 to make 600. That's it, period. And that's how we would take that trade. And if it comes down and hits our 200 stop loss, then we have to accept that and move on. So let's see. Balancing trading activities with family and leisure time promotes work-life harmony and reduces burnout. Guys, one of the reasons we get into trading is to become not just financially free, but to become free to be with our families more, to be with our friends more, to spend our time the way we want to spend our time. As the community knows, most of my trading is done between the hours of open, which is 9:30, to about 11, and sometimes it does stretch out to 12, right? That's only about 2 to 3 hours of trading in the morning. And then if I got something to do the rest of the day, I'm completely free, right? And if I don't want to take a trade that day, and if I get busy that day, I don't have to call out sick. The market will be here tomorrow. I'm my own boss. I just won't take any trades that day, and I'm able to take that day off. And that's the amazing ability that the market gives us, is that freedom. Again, not just financial freedom. What comes with financial freedom is our time, and you can't put a dollar sign on time. Sometimes you can. What we need for a good, well put together morning routine. All right, so here's the checklist I was talking to you guys about earlier, right? So define your objectives. Identify your specific goals for your morning routine, such as enhancing focus, boosting productivity, and improving your trading performance, right? Wake up time, decide on a consistency is key, guys. Cannot emphasize that enough. Consistency is key. Consistency is key. Always hear that. Always remember that. That's one of the few things I always hear in my head. That, and there's a few others. When in doubt, zoom out. Always look left. That's one Jeremy's been reminding me of lately. I personally like the when in doubt, zoom out. But look left is a great one too, because then you can notice, well, if I look left, we've been selling off. So let me go with that, right? Or vice versa. But waking up at a consistent time that aligns with your trading schedule will allow you to start your day early, and it gives you the time and the ability to make your trading plan early. It gives you the ability to wake up, get a glass of water, stay hydrated, maybe have some breakfast, make sure you got nice nutrition going in you, because with good nutrition and good hydration, we are doing better mentally, and when we do better mentally, we can do anything. So mindfulness practices incorporate mindfulness activities such as meditation, listening to music, or deep breathing to promote mental clarity and reduce stress. These are very important things. You know, if you don't want to be like, oh, well, I don't want to sit there and meditate in quiet, blah, blah, blah. That's okay. So sit there, maybe put some music on, play something that you like, something calm. Or if you like rock, play something not too calm. But do one of these things that'll keep you focused and take your mind off the market for a moment to let you get in a clear headspace. Chart review. So set aside time to review and analyze charts from the previous day or night to identify potential trade setups. The reason I say or night is for a lot of us future traders, the market doesn't close at night for futures. The futures are open 24/7, well, 23 hours a day, because it closes from 5 p.m. to 6 p.m. Eastern. So for that hour, that's when we have our close. Guys, YouTube, don't forget to hit that like button and subscribe. I do appreciate it. So create a to-do list. And guys, don't forget also, I am going to be going over exactly how I do my morning routine and exactly how I do my charting routine and how I create my trading plans and setups. And we'll even create some trade plans here live for you guys afterwards if you want to stick around. Alright, so create a to-do list, outline the tasks you want to accomplish during your morning routine, including chart analysis, market research, and trade planning. We want to know, is there going to be news today? A lot of times there will be news either at 8:30 Eastern. Whenever I mention times, guys, it's going to be Eastern because New York Stock Exchange, it's an Eastern time zone. So 8:30 is about an hour. Sometimes we'll get PPI data at 8:30 and we'll get a crazy wick of volatility, right? We get a crazy move and we get a nice move, and then market will open and we'll sort of like chop. But with futures traders, we're able to take advantage of that volatility, wait for the news to drop, and wait for the market and sort of wait for the dust to settle, so to speak, right? And then we're able to take our trades accordingly. Eliminate distractions. That's so important, guys. If we have any distractions, and when I say distractions, I mean anything. Somebody's knocking at the door, the window's cracked and it's making a noise, the AC's not working right, it's hot, it's cold. Any type of distraction that could throw you off your mental game is a distraction we want to avoid. So minimize distractions during your morning routine by silencing notifications and focusing solely on trade-related activities. Again, that's huge too, guys. You know, a lot of people wake up and they go, stay on their phones. But you know what? Again, that's normal. We're human. But as traders and as our own bosses, we need to say no. There's a time and a place for texting. It's not now. You could use your phone for news. You could use your phone for charting. This might sound silly, but I know if I gotta go to the bathroom in the morning, I'll be using my phone for charting, be looking at some charts. Always looking at charts. My family laughs sometimes, but they don't really laugh. They enjoy it as much as I do because, well, who wouldn't? Alright, let's get into the good part, though. What we need for a good, well-put-together trading plan. We need clear trading goals to define your short-term and long-term trading objectives, including profit targets and risk tolerance. So we want to identify our goals as to, am I going to be day trading today? Am I looking for a swing trade setup? What am I looking for? Preferred trading style. Determine your trading style that suits your personality and aligns with your financial goals. An example would be day trading, scalping, swing trading, position trading, and these different types of tradings, those all come together, right? So I'm somebody who would prefer to day trade or scalp, whereas somebody else would say, oh, well, I'm more interested in learning how to swing trade. I'm not going to say there's anything wrong with that because swing trading is fantastic too. Position trading too. Owning stock, selling stock. Huge. They're fantastic. Would definitely recommend trying anyone that suits your personality. If you're somebody who's got time to look at the markets and you're somebody who's really quick to click, or, you know, if you're somebody who's younger that plays video games and you're really in and out, you know, you're quick, then you might want to lean towards scalping. If you're somebody who's a bit more laid back, you're okay with waiting, you don't feel the need to be in a trade all the time, then you might lean more towards day trading or swing trading. That's when you hold for longer than a few minutes. You might hold for 30 minutes, an hour, a couple hours, and then swing trading is when you hold for a couple days or longer. Or even just a day into the next day. That would still be considered a swing trade. Risk management rules. Establish strict risk management rule guidelines such as maximum risk per trade and daily loss limits, and you need to respect your stop. There's too many times somebody will come up to me and say, Kevin, I've been doing so good in the market lately, it's been going great, but this last trade I doubled down on a loser and I should have just stopped out. And now my account's blown, now I gotta reset, yada yada. I just lost all my gains from the last 2 weeks from this one trade. And unfortunately, guys, that happens, but it happens when we're not disciplined. When we have our set stop loss in place in the market, or when we enter a trade knowing that we can lose X amount depending if it's options or futures, we need to know how much we're losing on that trade if that trade goes against us before we enter the trade. If you're entering a trade and you're just anticipating it's going to go in your favor, it's not going to go well and you're going to have a bad time, because at some point that luck is going to run out and it's going to take a hefty loss on your account, and it's going to feel very disappointing. Whereas if you stay disciplined and you were to stop out of that trade, and then it would continue going in the opposite direction, you would say, oh, thank goodness I stopped out. Or let's say you stopped out and then it did go in your direction. You know what? We don't know, because the market is uncertain, and you respecting your stop tells you that you're certain you won't be losing more than X amount. And what we could control is how much we lose and how much we gain. But what we don't control is how much the market moves. The market will move however much it wants to move whenever, right? The market will make a higher low, and then it'll just fail the higher high and just completely sell off, make another lower low, but then it'll reverse around, right? So the market's always trying to do something to grab liquidity, to trap people on the wrong side of the market, or to quote-unquote fake people out. And we don't want to be in on fake outs, we want to be in on the real trade. So that's where patience also comes in. Position sizing, that will determine how much of your trade capital you'll risk per trade. Ensuring consistent position sizing is important. This goes hand in hand with risk management. So a good example I like to use is is if you're trading something like the ES, which also has a micro, which is the MES. So the ES is the S&P 500, and $1 move on an ES futures contract is $50, whereas the MES $1 move is only $5. So you're able to get more contracts. You're able to then say trade 5 contracts for it to be $25 a point, and then that would be half of an ES contract. So if you're used to having a 5-point stop loss on ES, so you're always risking $250, but the market starts getting in a wider range and you have to adjust your stop down to 10 points instead of the 5 points. If you stay with ES, then you're going to be risking $500 on that trade. Whereas if you acknowledge that you have to have a wider stop, you're able to then say, okay, I'm going to trade micros this time and trade 5 contracts. That way, when I risk my 10 points, it's still only going to be my regular risk of $250. And that's where futures is really beneficial, because we're able to play with these numbers and they don't get affected by theta or delta or any of these other Greeks that options do have to go with, right? It's important as well trading time frames, guys. Specify the time frames you'll be using for analysis and execution. An example would be the 1 minute, 5 minute, 2 hour, 1 hour, daily, 4 hour, all of these time frames. So me personally, when I do my analysis, I do top-down analysis. I start at the weekly. I break it down to the daily. I'll break it down to an 8, if it's futures, I'll break it down to an 8 hour, a 6 hour, a 4 hour, 3 hour, 2 hour, sometimes a 90-minute, and a 1 hour. And that's how I'll break it down. And when I'm trading intraday, what I'll do is I'll be trading on the 5-minute and 15-minute time frame for my executions, but I'll still be using the zones and levels I found on the higher time frames, along with clues on the lower time frames like higher highs, lower highs, and so on. Entry and exit strategies define clear criteria for entering trades based on technical indicators, chart patterns, or fundamental factors. Set guidelines for exiting trades, whether based on profit targets or stop loss levels. Again, guys, it's so important to abide by your own rules. If I want to stop out here and my entry is here and my target is here, everything in between is just noise. We can't stop out sooner, we can't exit sooner, because then it starts messing with our risks or reward on these trades and we're not able to properly continue and move forward with our progress. Alright, so part 2 on what we need for a good, well put together trading plan. And again, guys, once I'm done with this slide, I'm going to pop over into a chart and we'll go over the S&P 500. We'll go over maybe the NASDAQ and we'll hit some large cap equities as well. Maybe Apple, Microsoft. If you guys got any chart recommendations, drop it in the comments now and we'll go over them soon. We'll try to go over them soon. So charting and analysis techniques identify the technical analysis tools and indicators you'll use for chart analysis. Trading instruments specify the financial instruments you'll trade. Example would be stocks, forex, cryptocurrencies, and equities. I thought I wrote futures in there. I apologize about that. But futures also being another financial instrument. What else? Market conditions is so important, guys. We have to know what was the market doing yesterday, what was it doing last week, what has the market been doing consistently that we could use in our favor. So determine the market conditions that we are currently trading in. Are we range trading? Are we trend trading? And once we understand if we're in a range or in a trend, we're really able to establish and take better trades. We're able to say we're in a range, I'm going to sell the highs and buy the lows. Or okay, we're in a trend, I'm going to buy the dip. Or if we're in a downward trend, I'm going to sell the rip, right? The opposite of buy the dip would be sell the rip. So news and events are also super important because news can have a big catalyst on the markets. We could have a huge volatile spike that could hit a lot of stop losses, that could go the wrong way, could go the right way. But when news hits, we want to be either patient and not in any positions, or we want to be prepared. Determine how you'll approach trading during significant news releases or economic events. FOMC is a huge one lately, guys. That's when Powell speaks. That's usually around 2 p.m. Eastern, and then 2:30. It's usually 2 o'clock is the FOMC meeting, and then 2:30 is usually when Powell likes to speak. Trading journal. We want to maintain a comprehensive trading journal to record your trades, strategies, and reflections. We want to be able to reflect, okay, these past few days I've been taking longs, they haven't been working out, or I've been taking longs and shorts, and the longs have been doing a lot better than my short positions, so it looks like I'll be holding my long positions longer than my shorts because the market's been stronger when bulls are in control. Trade review process. Establish a routine for reviewing past trades to identify strengths, weaknesses, and areas for improvement. Again, guys, if we're looking at the market every day and we're taking trades every day, we want to know what have we been doing recently that's been working that we should continue to do, or what hasn't been working that we should stop immediately. Once we start seeing a consistent pattern of something that hasn't been working for us in the market, we need to put a stop to that immediately. Because remember, the only person that's in charge of pulling that buy or sell trigger for us is us. And always continuous learning. We always want to be learning in the market because the market's always adjusting, so we always have to be adjusting. Plan for ongoing education and skill development to stay informed about market trends and new trading techniques. Alright, so that's the end of the slideshow. That's the end of the slide part of this webinar. Now we're going to be going over some charts if you guys are interested. Victoria's asking for ES. Of course we'll go over ES just for you. No, I'm just kidding. For everybody, of course, but because you ask so nice, Victoria. So let's start off at the weekly. So again, this is just like I was starting off. Brand new charts. I'm going to start off at the weekly. I'm going to see what's going on. First thing I see is we might have a supply zone right here, right? Let's see if we held that supply zone. So I'm going to grab my rectangle tool, and I'm going to throw that from here to here. and I'm going to throw the red on that. And I'm going to take my horizontal ray tool and throw that right there. And what's cool with TradingView is it's got where you could save it, right? So S weekly is my supply zone weekly. You'll see it changes the color and adds the word weekly to it. Just like that. That way I don't have to change the color here and then go into settings and type weekly or type 4 hour. I don't have to type it every time because it's already preset. So I see that and I see, okay, well, it does look like we did momentarily break it. So I'm going to consider this more of a weaker zone, but it's still a weekly zone. And weekly zones are usually stronger zones because they're based off of the weekly time frame. Let's get volume off of that. And let's see. So the next thing I see is it looks like we have a weekly demand zone right here because it's a red candle followed by a bunch of green strong candles. So I'm going to say, okay, well, it looks like here's my weekly demand zone. Daily, weekly. Oh, here comes Lucy. You guys want to see her haircut? She looks so cute. I don't know if y'all can see her. Let's see. There she is. She's funny. She shows up every now and then. Alright, so let's see. Alright, so I'd say, okay, here's my weekly demand zone. Here's my weekly supply zone. Now, what's that doing? That's giving me a range. Now I have this big range, but then I'm going to break down the time frames. I'm going to go from weekly. Now I want to check out the daily. Do we have any daily demand zones? I see a daily demand zone right here. I see a demand zone. Looks like there should be a demand zone right here. And the reason I say should be is because there was a consolidation and then there was an impulse move. Now, normally when we have a consolidation followed by an impulse move, it's because the banks and the big institutions were filling their orders down here to push us higher. So I'd mark this off. I'd mark it off as a daily. Hey, what's going on, Antonio? How's it going? Alright, I'm going to mark that off as a daily. Now, normally, I'm just going to point one thing out, though, is usually we have our zones will be just this red candle down to the wick, but because this next candle wicked below it, I'm going to mark it from the open of the candle down to the low of the next candle. And that's going to be my daily demand zone. I do think these are a little, let's see, visibility, style, where is, there it is, transparency. We'll bring that down a little bit to 30, that way, look at how much more clean that looks, so we can see the candles within. So let's bring that back down to 30. A lot of times what I'll do is I'll bring it up a bit, that way they stand out more for me if it's a stronger zone. Alright, so now that I have my daily zones, I'd again go into something to the hours. So now I'm going to start with the 8 hour. I'm going to look for some type of 8 hour demand zone. And we're going to look for something with an impulse move and something that held up, right? So what I see here is I see a demand zone. I see that it started to work, but because of the pressure of this supply zone, it failed. So if we did mark this out and did have this marked, we could have taken this trade and we could have gotten, let's see how many points on ES, could have gotten anywhere from 20 to 40 points. 43 was the high from there, but let's be realistic. We always just want to try to get a piece. So let's say about 30 points from that still would have been a good trade in comparison to how many points we would have risked on that, which would have been about 20 points. So we're not even looking at a 1-to-1 on that. We would want something higher. We want a 2-to-1, a 3-to-1, a good risk to reward. So what I also notice is, look at this. When I bring it lower, we wicked out of it, we broke it for a moment, and then we started going higher. So now comes the market context of what are we doing here, right? So we made a higher high, a higher high, a higher high, along with a higher low, a higher low. But then we came a bit lower, made a new low. Then we made a lower high. Now that's telling me the trend is starting to reverse. Then we start pushing lower. We create another low. Then we start lower again, another low. Then we come back up, create another lower high right here, because we'd go lower high to lower high to lower high, and then another lower low. But on this lower low, it wicked right out of the bottom of this demand zone. That wick would have been a potential liquidity grab. I want to go into the 5-minute real quick to show you guys exactly what I'm talking about. Alright, so you guys see how we broke it for a moment, but we failed to stay below it. We broke it for just a couple points, then we came right back up into it, and then we ended up with a slow grind higher. It was a very choppy grind higher, showing that the market is getting weak out of this demand zone. A strong zone reaction would have been like this one right here, where we wicked it, we reversed, and we started to pump right after. Look at that. That would have been a stronger reaction than this type of reaction. This reaction is choppy and sloppy. That is not a good reaction out of a zone. Whereas something like this drop was very nice. Let's see if we have a supply zone that was there. But let's go back to our time frames, right? So we could do more of our technical analysis. And this is exactly what I do every morning. And with the community, guys, as I told them, unfortunately, because this past week I've been sick, and prior to that I have been dealing with some family matters. I'm going to be trying to get on earlier. Instead of getting on around 9:15, 9:20, I'm going to look to get on closer to 9 so we could do more morning routines and more morning checklists with you guys, so we know exactly what we're up to and have good trading plans for when the market opens. So what I'm looking for here is we made the higher high, lower high, lower high. I'm going to look for this wick. And what I'm going to look for is I'm actually going to wait to see if we break this high and fail it. But there is one other thing that catches my eye on the 8-hour, and that would be this pin bar candle right here. So this candle right here is an 8-hour supply zone, because it was a green basing candle, small body, long upper wick, and then it had two strong sell-off candles, right? So it had a drop, a base, and the base would be the supply zone, and then a drop right afterwards. And this was a pretty strong drop. Went from here, first it came 45 points, then it continued lower to about 80 points. Now that's a pretty strong zone. So I'm going to be looking to play shorts in this zone right up here. So that's exactly how I would create that trading plan. So now I have this 8-hour supply zone within this weekly zone. So now I have two strong supply zones inside one another. So I know there's going to be good selling pressure there. So next thing I'll look for is the 6-hour. And again, it does, you guys see how the 6-hour also sort of forms the same candle, same area. So whether you mark this as the 8-hour or the 6-hour, it really doesn't matter. I'd prefer to mark it as whichever is the higher time frame, which would have been the 8-hour. And if we look at this key level right here, if we look at the level where I wicked this right here, if we, let's see, can we extend it to the left? No, it does not. Going to say if we extend it to the left, however, it's a key level, because look at that, it wicked here, it was resistance, resistance, then we broke above it with support, 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 and now it's resistance again. So I wouldn't be surprised if we wicked above it and then failed to go lower. So that's something I would be keeping an eye on. That's something really, really strong right there, is that 4560 level. So now that we're done with the 6-hour, again, not seeing any other demand zones over here because we've been starting to break demand zones, I'm going to look at the 4-hour. It looks like there's this 4-hour zone right here, but we already have the 8-hour zone right here, so I'm not going to mark that because the 8-hour zone's already covering. Maybe I would mark the 4-hour down here, and that would be a good 4-hour demand zone, and would wait for price to come down there. Now, a lot of times, guys, with supply and demand, it would be waiting for price to come to our levels and come to our areas, but that's okay, because a lot of times also we use it to our advantage, because when we come down here, there's a good chance we're going to have a big sell-off, and this demand zone, a lot of retail traders or people who are unaware of supply and demand will not know that this zone is sitting here, and we could get either a bounce or even a reversal there, depending on other key factors in the market. So again, look at this. We have a lower high, lower. If we're looking at the bodies, we have a lower high, lower high, lower high, lower high. But if we're looking at the wicks, the lower high is right here, but the lower low is right here. So we're still making lower lows. Just because we made a higher low right here for a moment doesn't really mean the trend changed. Maybe it just means it temporarily had a bit of market relief. It had a bit of a bounce. So let's go now to, we went from the 4-hour, now let's check out the 3-hour. And the reason I go through each time frame, guys, is so that I make sure that if there's a clean zone, I'm not missing it. I'm not forcing a zone on every time frame. I'm checking every time frame to make sure I don't force a zone on some time frame that I shouldn't be. And remember, the higher the time frame zone, the stronger the zone is. So let's mark this out right here. I see right away this basing with a rally, had a little pullback and a rally right after. So I'm going to mark this out and make this a 3-hour, and this 3-hour also covers the bottom over there. So now I know for sure if we do break again, we might look for a stronger drop to the downside. What I'm also looking at is this candle right here, where it's got a small red body, a strong green rally, and then continuation, right? So if I'm looking at this candle from here to here on its first move higher is 48 points versus the wick of that candle was only 12 points. That's a strong relative zone right there, right? Because the rally was much stronger than the wick that was presented. So I'm going to mark that off, and I'm going to make that a 3-hour demand zone and make that zone green, right? I'm going to be watching that. Oh, where'd that go? So we're going to make that green. And that's going to be another zone I'm going to be aware of. And we also use zones, guys, as targets. So if I'm short, what I'll do is if we break this zone, I'll look for a retest in this zone. Here, I'll show you exactly what I would look for. There's a really cool tool in here. I believe it is... Oh, I know it's here. Oh, I was using it the other day. It like auto connects. Sorry guys. Oh, there it is, path. Right? So I would look for a break, come back and retest this zone, and then I would enter here and I would target this zone down here. Right? So I would take a short position and have a 30-point target with a looks like about an 18-point stop, 15-point stop. That would be a 2-to-1 risk to reward trade. So that would be a decent setup that I would look to take. So what else do we got? Let's see. Would you scalp that? Would depend on the strength of the market. It all depends, because I only like to scalp when we have a lot of volatility and a lot of strength. If we're in a tight range, like if we're in something like this right here, I wouldn't touch this at all. But if we had strength, like something like a strong, like a big wick on the bottom, I would maybe scalp this candle. I would say, okay, I'm going to go long for this whole candle and look to exit as soon as the candle closes, or as soon as it gives me a strong enough pump that I'm comfortable with profits, that I'm going to take that. Because when we come to scalping the market, risk to reward isn't so much important, because a lot of times if I'm entering here to scalp up there, my stop loss being at the bottom, that's barely a 1-to-1, but I'm scalping it with momentum. And it's that momentum that makes me want to scalp. If there's no momentum, there's no trade. The scalps come with momentum. Well, momentums come with scalps. There was one thing I wanted to show you guys on the NASDAQ. And good, it's still set up for you. So something I wanted to go over, and this is something I shared with the community, was this blue trend line right here. And I started it at the top of this wick. I brought it to this low, and then this low, and then every time I noticed this low was new today, but I noticed that every time we made a new low and we broke this demand zone, but every time we wicked a new low, we had a reaction back upwards, right? Just one time, 2 times, and I told everybody in the community, watch this trend line. It looks like it's going to happen again, and that's exactly what we got. So if we look at the 15-minute time frame, what happened? This is a new low. It wicked. It tried to make another low near this trend line. See how this is lower than this low? Barely made that new low. It was stop hunting. It was trying to trap people on the wrong side of the market. People were looking left, saw this sell-off, and said, oh, well, we're going to continue. That's so strong. We're going to keep going. No, the market caught itself at that trend line and reversed. And again, today at 11:15, 11:30, we got that same break, and then we just pushed back higher. So that would have been a great entry to go long. And because we were able to grab a fake out, what you'd be able to do there is you'd be able to grab a pretty high size in contracts. You'd be able to go a little heavier there because you have a tighter stop loss. Now I want to go over how helpful the long position, short position is on TradingView, because it really does help us acknowledge how many lots we could trade, which when I say lots, I mean how many contracts, and how that would affect us. So if we're looking at to enter at this key level after we break that trend line and come back higher, we're looking at a 2.6-to-1 risk to reward. And if I'm looking to risk 80, we would be able to profit 210. But let's say we wanted to target the top of the 8-hour demand, right? Which worked as a key level here, key level here, key level here, 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 a lot of places, right? So with supply and demand, our demand zones, the top of the zones and the bottom of the zones, are strong areas of interest for targets and for reversals. So because of that, and because of the trend line, all those adding up, that gave us a high probability trade. Now this brings it to a 3.6-to-1 risk to reward. You would risk 80 to make 290. Now let's say we wanted a higher risk, right? Let's say we wanted to risk 200. Well, now we're looking to risk 200 to make 730. But if we were able to get an even better risk to reward on that by entering the trade closer to that trend line, knowing that there's a good chance we're going to reverse, look at how much higher the risk to reward gets. Now, and look how many more contracts, right? I know it says 0.7 there. Let's pretend it's micros, and it would just say 7. Once I bring the stop loss up a bit too, now we're looking at a 10-to-1. We're risking 200 to make 2,000. So think if you have 10-to-1 risks to reward, you could take like 7 losses in a row and still be profitable from that one winning trade. So all we need is that high probability trade that we could really add profits to with a tight stop loss, and that one trade could help keep our consistency up. So as long as our trades are at least 2-to-1, at least 3-to-1, then we're solid, then we're good to go. Now not only will we be able to be profitable even if we have more losses, but when we have more winners, those winners are going to be that much better because the losses will be like they're not even there. So let's say, you could have a 30% win rate with a 3 to 1. But let's say you have a 60% win rate with a 3 to 1. Now you're going to be swimming. You're going to be doing fantastic, and it's all because you had a good risk to reward and you followed your trading plan. That's where it all adds up, guys. Where it all lines up is having a good trading plan, good risks to reward, and really following your plans as well. This was another strong area. This blue area right here was not an area that I took short personally, but it was an area that I did let our community know about. Let me just try to hide this real quick. There we go. So with the short positions, right, this would have been my entry to go short, and I instantly have my stop loss is just the top of it, or even if I wanted the key level, but let's just say for the sake would be the top of that zone, and we crack down into the 5-minute, what did we get? We got a quick and nice trade that was also a 10 to 1, 9 to 1, and that's not even if we targeted the demand zone over almost an 11 to 1 risk to reward, again in a situation where even if you just risked $90 on this trade, you're looking at over a $900 return. So if you're consistently risking $90 on each trade and it's 2 to 1 and you're making 180 on your winners and not losing 90 on your losers, the 180s are going to add up a lot quicker than the 90s. And again, it only gets better with the higher risk to rewards, right? So if you have a 3 to 1 and you're risking 100 a trade and you're making 300 per trade, well, you win 2 in a row and you're looking at $600 in profits, you're able to then take 3 or 4 losses and you're still green $200 versus somebody who might have a poor risk management and they might have 2 or 3 bad trades and their accounts blown. So it's really important to understand the importance of risk management and to really be able to establish and really go through with it and take advantage of it and take advantage of, well, being in a good community, but also being able to take high probability trades with high risk to reward. Does anybody have any chart recommendations? Do you guys want me to go over any equities real quick before I finish up? Apple, Microsoft, something like that. How you guys are getting Apple? She's back here.
Okay, thank you, sorry.
They were looking for the pup. Alright. So let's do regular hours. Kevin, would you quickly explain the price tool? Yeah, for sure. So yeah, that tool is the long position and short position. If you want, I did explain it also briefly. Different strategies for scalps versus trades. Let me go over the tool one more time for you real quick. What I'll even do. Oh, I can't hide that? Yeah, I can. There we go. You know what? Let's just do NQ, and we will, let's just say again, look, you could see clearly now, right? All these lower lows, and then each time we made that low, we wicked up higher, made the low, wicked up higher, and we didn't need a 500-point move to make that high return. We just needed that consistent push. We just needed that good entry, short risk, and more contracts so that we could really profit on the right trade. What was the question? All right, so just go over, I guess, just to go over it. So risks or reward tool on on TradingView. I am going to make a YouTube tutorial on this, guys, too, just so you know. But real quick, what you're going to do is you could right click it and go to settings, and you could go with your account size. Usually I start off with a 50K account. Some people might want to do 25K, 100K, and lot size, always keep it as 1. And for risk, it's usually set to %. But I'm going to want to do USD or wherever you are, whatever you would count it as. And let's say my risk again is 200 or 250. That way, it's always 250. I'm actually gonna do this on MNQ so we could get a better feel for it, so we could see some real numbers with that. So I'm gonna show you exactly what I mean. So let's just say my entry's down here, right? My stop loss is over here, and it tells you you need 4 contracts to risk 250 points down here. That means you need 4 contracts for this to be 250 points. But those 4 contracts, if it goes in your favor, will net you $1,546. This is a 6-to-1 risk to reward on risking 250 bucks. Whereas if you brought your take profit a bit lower, be 4 to 5, you'd still be risking 250, and it would be 1,100 take profit. But let's say you had a bit of a different risk on this, right? Let's say you needed a wider risk. Watch this number right here, this 4.2 for your contracts. This is how many contracts you need. You would pull this a bit lower, and it would bring the contract size down. So now it would be 3 contracts because it measures how many contracts you would need to hit $250 as the stop loss. And then it still measures how many contracts and how much your gain would be with that many contracts if this was your take profit. So by having a tighter, watch while I pull the stop loss higher, it'll not only add the contracts, but it'll add to the profit, right? Because it's adding contracts. So I add contracts, now I'm at 4 contracts. Our take profit went from 800 to 1,000. Now we're doing even better on that trade, and we're still only risking 250 because our stop loss is moved up higher, but we added more contracts. So that's about it on that end on how to sort of explain it. Victoria says, do you have different strategies for scalps versus trades? Yeah, so scalps is really just purely momentum, and I want to see really good volume coming into the market. So whether I'm using my Thinkorswim and using a volume indicator where it shows my volume cloud, as most of you have seen in a lot of the live videos or when I'm live streaming to the community, the volume cloud shows the difference between buying and selling. Usually it'll be more green for buyers, all red for a lot of selling pressure. But that's about it. Order flow is really important for scalping because we want high volume, high volatility with scalps. We can't have a low choppy market. That's too tough. Gotcha, Victoria. The next question was, is your chart trading view platform also, is this being recorded? Yeah, Lanny, this is definitely being recorded. Yeah, you could paper trade that risk to reward with trading view. I'll even show you. You hit trading panel, and you come up, and you can hit paper trading, and you just hit connect. And what you would do is you could right click it, and you could hit create limit order. And it's really cool because then what it'll do is it'll limit order the 4 contracts, and it'll put a stop loss and a take profit there. Look at that, just like that. Look how beautiful and look how clean that is. So if I exit that, cancel it, right, and I want to bring it up a little bit, let's say I want to bring it up to 3.8, right? So what 3.6 for the contracts. Now obviously we can't trade 3.6 contracts, so when I do create limit order, it's going to do 3 contracts. So instead of it risking 250 to make 960, it's going to be risking 204 to make 786. So it does adjust itself accordingly, but this tool gives you the all-in-all whereabout, you know? And it's really, really a great tool to help visually see, what am I risking? What's my reward? Is this really a trade that I want to be in? What else? Awesome, Antonio. I'm glad I could clear that up. I know at first when I started using TradingView and I was using that this tool, I was really just using it for that green and red, and I had no idea what these numbers were. I mean, I was able to sort of figure it out, like, okay, well, 130 points up, 34 points down, and I guess this would be 17 points from our entry. But it's still just it was confusing. But once you do understand it, it's a great tool to use. And yeah, Lanny, you could definitely use that for paper trading, and you could also connect your personal brokers to it as well. So if I have paper trading and I want to log out of paper trading and I want to use my TradeOvate account, I could connect my TradeOvate account to it. Or if I want to do my TradeStation account, I could connect my TradeStation account to it. And you could still use those same tools. It often seems that the first 15 minutes or so after opening the ES gets extremely up or down. Do you recommend sitting on your hands? Tom, that's more of a personal, I guess, preference of a question. That really depends on the market, because sometimes the market will do that in the mornings where it is very volatile, then it reverses, and sometimes it could be very choppy, and then it gets a trend around 11. So it really depends on what the market has been doing previously. Like, what has it been doing the past few days, the past couple weeks? Because whatever the market has been doing, just assume it's going to continue that trend. The market is very habitual, right? The market will continue doing the same thing, keep slapping us until we realize, okay, no, I'm not going to do that anymore. I'm going to do this now. And then we take control of our emotions. We take control and we take into consideration how the market is trading, and that's when we could really make some nice profits and use the market to our advantage. Alright guys, got a little sidetracked with the TradingView tool there. Do apologize about that. As for our morning routines and stuff, it's all about being consistent with it, making sure we wake up early enough to create a trade plan, make sure we wake up early enough to give ourselves enough time to go over our charts, to go over our equities if we want to trade equities, to go over our stocks if we want to trade stocks, futures if we want to trade futures. And it's really great. TradingView is a great tool to use because of that short and long position tool, and because it is just also all in all a very clean charting platform, and you could connect a lot of brokers to it. Alright, if anybody else has any other questions, don't mind dropping them in the comments. If not, don't forget hit that like and subscribe button. Most of these webinars are usually on Saturdays. This one was pushed back because I wasn't feeling well. But yeah, drop any questions you got now. I'm gonna sign out. If you got any webinar suggestions though, guys, definitely drop that in the comments too. And again, hit that like button because it does take me some time to put these webinars together for you guys. Seven already, damn. I thought this one was gonna last 45 minutes. I always tell myself that. Absolutely, Lanny. Absolutely, Victoria. It's my pleasure. I'm glad to have you guys part of the community. You guys are awesome. Everybody in here, if you guys are part of the community, some names I recognize, some I don't. Antonio, I know you from YouTube from earlier today. Appreciate you coming into the webinar. Definitely hit that subscribe button. And guys, soon, not too soon, but eventually, we're probably going to take ourselves off of YouTube for free and just really be streaming for our members. So definitely look to join our community because we are making some pretty big changes, and I wouldn't want you guys to miss out. And we go live every single day. I go live every single day, and so does Jeremy. So you guys got 2 trading rooms with 2 different teachers with 2 different trading perspectives and 2 different successful trading strategies. Alright guys, appreciate you all for joining. I'm going to have Lucy say goodnight. She says goodnight. Hope you guys all have a great day and a great weekend. I'm sorry, great weekend. I think it's Saturday. It's Monday. Hope you guys all have a great trading week. Trade well, trade happy. Happy trading, everybody. Let the bulls keep bowling and let the bears keep bearing. Just trade with the trend. The trend is our friend. Good night, everybody. Take care.